The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 8:30 a.m. Tuesday morning, 60 minutes to go until that opening bell. And we got kicking off December trading, folks, just like November. Positive territory across the board. S&P's up almost 1% right now, trading up 33 points at 36.56. We got the NASDAQ up 103 points, 12,379. The Dow up almost 300 points right now, 29,918, gunning for that 30,000 mark yet again. And the Russell continuing quite the month it had in November. Russell up almost 20% for the month of November, was up 20% at one point, pulled back a hair. We got the Russell right now up 1.2% to kick off December trading at 1843. We got the crude contract hanging steady at 45.18. OPEC, not sure what they're going to be doing. They're going to be meeting again Thursday, I believe. Gold contract catching a bid. Finally, off of the lows. This is a 1-minute chart I got up there. Let's put it on a 15-minute. You see the acceleration it had from Friday, dropping from 1820. We were at 1875 just last week. You really fell out of bed on Monday, beginning at 1870. You go down to 1767, but since then we're up a solid, what's that, $44, $18.11 in the price of gold, catching a bid this morning. Silver up 92 cents at $23.51. Look at that acceleration. You're talking about $1.50 from the lows we had to kick off Monday trading. Notes and bonds, a little bit of lower price and higher yield. The 10-year right now just above 0.86%. The 10-year off 4 ticks at 138.01. The 30-year off 17 ticks at 174.12. We'll jump over to the VIX as we have this market charging higher. The VIX barely almost got a 19. Did we get a 19? We did not. The low overnight, 20 on the dot on the VIX. We're hanging at 2032 for some context on the VIX. There's your daily. 2032 right now. We got to 20. The previous low, folks, we were dealing with was 2028. We're now basing below that level for the first time since the COVID pandemic began. Pretty remarkable. All right, you want to talk about remarkable, right? Let's jump over to Tesla shares. Tesla, it just don't stop, folks. We had one negative day yesterday, but guess what? We're going to erase basically that entire day yesterday. Tesla's up almost $30 right now. You put this on a 15-minute. There's your acceleration last night. The news coming out that Tesla will be added to the S&P 500 all at once, quote unquote, rippling across markets. Pretty remarkable, folks, that money managers to adjust portfolios for the $538 billion company. Now, guess what, though? That's as of yesterday. If this thing accelerates into the end of December, when these funds have to add the Tesla, you're going to see some serious volatility. December 21st, the day of reckoning, we'll call it, a move that will ripple through the entire market as money managers adjust their portfolios to make room for shares of the $538 billion company. Well, guess what? The price is going up, folks. You got Tesla shares right now. You're trading up $30. $56 would be 10%. So right away, you're up more than 5% right now. Add that to the market cap they're gonna have to compensate for. Seventh biggest company currently, falling between Berkshire Hathaway and Visa as they enter the S&P 500 with $11 trillion in funds tied to the S&P 500. Money managers have been looking toward a few busy weeks ahead of no matter how Tesla was included. Now, one thing here, if you're a straight index-based fund, and let me see if they talk about it here. You may not, they say, after initial buying of Tesla into the inclusion, the stock may pull back if history is any guide, according to somebody they're talking here, Gary Black, a private investor, CEO of some asset management firm. Shares may fall about 10 to 20%, a pattern that would be consistent with what happened to Facebook after its entry to the S&P 500 7 years ago. Crazy, folks, as Facebook's been in the S&P 500 for 7 years. But you see that acceleration. the funds have to add Tesla, and the funds that are directly tied to the S&P 500, they don't add it more than a day, 2, 3. You can't add it a month in advance and risk being that wrong on an entry that big into the S&P 500. You'll have no correlation to the index. You have to actually add it right near the day of reckoning. Man, I don't know what's going to happen. It's never happened before. You're adding basically one of the 5, 6, 7 biggest companies to the index all in one day, and all of those funds have to buy that. I mean, what happens? Does Tesla all of a sudden, when nobody is selling and everybody is buying, run up to $1,000? It's possible, folks. Anything is possible. This stock is disconnected right now from the earnings. A lot of technology stocks disconnected from their earnings, okay? But not in the way that Tesla is right now. I mean, since we were trading at 270 on August 11th, you have announced a stock split, and you have announced entry into the S&P 500. You have risen from $274 to $600. Both of those driving forces have actually nothing to do with the long-term production, management, capacity, earnings, revenue of this company. The only argument you could make is you get this type of acceleration, right? You have a market cap behind it. You have the ability to borrow. You have the ability to issue shares if you'd like. I believe that's what happened up here, right? When Tesla hit 500, they decided to make available shares to sell to the market. Even Elon said, hey, we're at $500. We might want to sell off some of these shares to the public and take some of that cash to use it for a later purpose. Well, guess what? Now we're at $600. Again, no real economic driving force. There were their earnings in October. No reaction on their actual earnings that we've had since a period of July 22nd. If you recall, July, Apple, the first company to talk about their stock split, right? They split. Elon says, why didn't we think of that? He announces their split, and I believe Apple announced on their earnings call back then. Let's pull it up, because Apple's had quite the run as well. Yeah, and there it is. So they announced their split. Apple, when they were trading at a hair about 100, they drive to 140. Apple had quite a day yesterday. We're going to open a little bit higher for Apple as well. We're up about $2 to 121. So some context, Apple announced it on July 29th. It took Elon Musk August 11th. Less than 2 weeks to figure out that they should split too. And it was a good decision, it seems, as it's been a rocket ship since then. And Tesla shares, you see the pop it had last night on the news that they will enter all at once. I mean, the market knows you got to enter all at once. That's a good thing for the bulls, at least for the short term. All right, you're just exacerbating a bubble here is kind of what you're doing, in my opinion, okay? But you already have a stock that's very elevated. You're going to have all these fund buyers. They're going to have to come in December 21st, folks. Mark it down on your calendars. That is going to be a Monday, okay? You're talking about 3 weeks from yesterday, and you're going to start to see when we come into December 17th, December 18th, that's when the direct fund buying may factor into the movements of that stock. It'll be really interesting to see what happens ahead of that. Is the market going to be able to support a $600 price tag coming into that? As the S&P fund buyers are forced to buy that, are people going to use that as an opportunity to exit? Because, you know, if S&P fund buyers have to buy it, right, are there going to not be enough sellers as Tesla rises from 600 to 700? Because theoretically, right, if it reaches a value that far exceeds its true value, market forces should say, well, geez, it's at 600, it's at 650, it's at 700. You know what? The only reason it's here is because S&P fund buyers are buying it. Once they're out of the room, this thing's going to plummet. So I'm going to sell it at 650. But that's talking about reasonable actions in Tesla. We'll see if that happens. Stay tuned, folks. We got Zoom earnings, lots to go over.
We'll be right back. Listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We get the markets in positive territory right where we kicked off the program. Basically, S&P's right now up 34 points at 36.57. Quite the run that we've had, folks. You back this up just for some context on the S&P's, right? You started the year 32.36. I've talked about it many times, but we're now 11% positive for the calendar year. I was listening to a lot of analysis this morning early on Bloomberg. One person, they were talking about is this peak optimism, because we are now 14 days out from states potentially literally receiving the first doses of the vaccine. You buy the rumor, you sell the news, right, folks? We were just talking about Tesla. You may see a run-up to their entry in the S&P 500. Facebook, they dropped 10 to 20% 7 years ago after you get in there. Everybody's anticipating the run-up. Everybody knows that you have to have trillions of dollars of demand literally centered around 2 to 3 days, and that's probably being kind. If you're a benchmarked index and you go out 4 days of ownership in Tesla around a period of volatility like that, you could completely skew your results, right, to track that index. So you have to be pretty close to the day they got added. If everybody has to be pretty close, you're going to have trillions of dollars of buyer demand coming in at the same time. Just pretty remarkable that you have the S&P 500, similar fashion. The optimism, the run we've now had, as we got the vaccine news, because that's when it started, folks. You saw all of these, and that is the month we had in November we got a lot of clarity. We're kind of, time moves so quickly. We had a lot of optimism 4 to 6 weeks ago. We have a lot of facts now that we have really effective vaccines that look to be safe that are now coming for approval ahead of the FDA, ahead of the EU. I mean, I'm jumping around a bit. I'm going to talk about Powell in a moment, but since we're on it, Pfizer, BioNTech, they're seeking EU clearance for their COVID-19 vaccine. We had Moderna yesterday with theirs. We have AstraZeneca out with their information last week. All of them pretty effective. I mean, ideally, we were hoping for at least 50 to 60% effective, right? Hopefully 60 to 70% effective. We're coming in at 90 to 94.1 to 95. AstraZeneca, that data a little bit sketchier. That's a loose term, right? But they had some mishaps with the dosing. It'll be interesting to see what their final results yield. But it looks like when you talk about the Pfizer, the BioNTech, the Moderna vaccines, pretty much in line with their early estimates, the world is going to open back up. Now, back to the market. We trade up on the optimism, but now we're there. And maybe the world comes to realize that we need 2 doses of this, number one, to get immunity. So you're talking about 4 to 6 weeks from the moment that the mass public starts receiving those vaccines. We got about a month and a half lag from the first people starting to receive that full immunity. Okay, and that's about 3 to 6 months out. So we got to weather this thing for 3 to 6 months, and that's a long time. When we have no second round of stimulus, we'll tie things back. That's a perfect segue to Chairman Powell as he comes before Congress today and tomorrow, talking about the importance of lending programs cause the economic outlook extraordinarily uncertain. There could be a little bit of complacency going on here, folks. Okay, the markets are up 11% for the calendar year 2020. Have you paid attention to what's going on? Certain businesses flourishing in a big way. They're going to matter for the market caps of those companies, contributing to the S&P 500. And I'm all over the place, but it's a good discussion because you get into this here, and let's pull up the heat map. Okay, let's pull up specifically on the Thinkorswim platform, the S&P 500. Apple, quite a juggernaut. Microsoft, Google, Facebook, Salesforce, they have numbers after the bell tonight. They've pulled back recently on their acquisition that's going to be announced today, reportedly on Slack, Work. Amazon, a juggernaut, of course. But folks, these companies in here, there's a lot of pain going on for these companies in the S&P 500, and there may be a lot of pain in the next 3, 6, 9 months as people who lose their jobs are unable to contribute to the economy, and that's the worry. You get a trickle-down effect. Jobs get lost. Consumer spending gets lost. More jobs get lost, right? So you back it up. Powell talking about, in prepared remarks, he stressed the importance of the Fed's lending programs through the act. Several of those programs ending December 31st. Secretary of Treasury Mnuchin said the funds would be better spent elsewhere. Now, the debate here centers around Mnuchin talking about the $455 billion in funds directed to the Fed better used elsewhere. Based on the recent economic data, I continue to believe the targeted fiscal package, this is Mnuchin, talking about the $455 billion, targeted is most appropriate. While Powell said the programs helped unlock almost $2 trillion of funding, the actual use of them was much smaller, a little over $100 billion. Now, the argument here, though, folks, is that just the fact of being there is what's loosened up these markets and allowed them to be so fluid and well greased that they're running efficiently, okay, because market participants realize that the Fed is there for a backstop. So the argument that, well, the Fed hasn't had to step in, just the fact that they are there. I mean, it would be a similar argument, right? So hear this one out and understand it, because this is how I made sense of it. I was talking to some friends, even last night, okay? The FDIC insurance, folks, does not actually get employed in this country, deployed, I should say, as in the government does not have to step in and use their funds to provide it to citizens for FDIC insurance when banks go out of business, because very rarely they do, and they don't go out of business for cash runs because FDIC insurance exists. Do you see how that works? FDIC insurance does not get used because the fact that that insurance sits there by itself allows the bank to avoid a run on the bank, because markets act rationally knowing there's an FDIC insurance backdrop, even though statistically you could say we don't need FDIC insurance because we barely even use that program. It's useless. Why are all these funds sitting here available to provide federal deposit insurance when they've never been used? We don't need them. Give us those funds back. We don't need that insurance. It's something that the government doesn't even use. It's abundant. Those funds could be better used somewhere else. What do you think would happen, folks, if we took away FDIC insurance? There'd be a run on the banks. This is what Chairman Powell is saying. Okay, he's saying you're taking away a backstop, which is the reason why we haven't had to use that backstop. Market participants in an extremely, as he calls, extraordinarily uncertain outlook need a backstop. The reason why we haven't used the backstop is because of the backstop itself. The reason why the government doesn't have to step in and provide consumers their money when banks go bust from cash runs is because we don't have cash runs, because we have FDIC insurance, okay? So think about that when you hear that we don't need these funds, they're useless, they can be better used somewhere else, as you have the chairman of the Federal Reserve put in by President Trump himself saying these funds are entirely important because of the extraordinarily uncertain economic outlook that will persist for the ongoing period of time as we rest. So he's in front of Congress today, tomorrow. We'll see how that battles out. You're going to see that play out as you have Chairman Powell trying to speak up for those funds in the interest of keeping the economy going. He can only do so much. We need some fiscal stimulus here over the next period of 3-6 months. We're not getting it yet. We'll see if it comes in. All right, earnings. We'll do a little bit of teaser. We're going to talk about them when we come back. Strong numbers. Company sees 329% revenue growth in the quarter ahead. 329% in the quarter ahead. But guess what, folks? Zoom, we got a lot of action already priced into Zoom. As you're trading at 478 yesterday, I'm going to put it on a 15-minute. You'll see the drop to lower price. There's the acceleration on their numbers last night. We're trading lower this morning to 442. I mean, all things considered, folks, we started the year at about 65 in Zoom. Stay tuned. We'll be right back after the break to finish up the show.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&Ps hanging up about 35 points right now. We got a chart of Zoom up here. Zoom trading down about, what are we down? $35 right now at 442. Zoom, it's had quite a run. Getting into some of their numbers. Strong numbers, folks. But as I mentioned, you go from $60 to a price tag of $460, $480. You better deliver, and they have delivered. It's just that, they're priced for perfection. A lot of these equities that you've had these insane runs. We'll call it an insane run from 60 to almost 600. Check out the numbers, 99 cents a share versus 76. How about revenue of $777 million versus $694? When you hear these comparisons of like these bubbles and Zoom bubbles and all this stuff, folks, they have almost $1 billion in revenue. Okay, these are not the same type of tech bubbles that we've had previously. You're seeing companies. Now, Zoom's one of the best. There are some companies that are maybe catching bids that don't deserve it out there. This company probably deserves it. They have a very bright future. I have some Zoom, so I'm biased. There's my disclosure. But you're talking about gross margins of 66.7%, down a bit, but down a bit with a rise in revenue that's pretty dramatic. During the quarter, Zoom dealt with a higher mix of free users, including students, teachers. That impacted a gross margin, as did the higher than usual reliance on public cloud sources. Nonetheless, more than 80% of the fiscal third quarter revenue gain came from new customers, subscriptions. They have revenue in Asia Pacific, Europe, Middle East, and Africa growing big as well. Percentages on small numbers can skew, so not sure about that. But how about 433,000 customers with over 10 employees? That's the big one, folks, okay? They have over 500,000 customers with 10 employees. That's the people that they're going to be making money from. Companies with more than 10 employees that have, real money that they can be spending. All right, jumping around, the other thing I wanted to touch on, Exxon. They are looking to write down, potentially, you're talking about $20 billion for their assets in the fall of crude. Crude behaving well today, down about 12 cents to 45. Well, we started the year, it's tough to remember, in the 60s at crude before going negative. Stay tuned, folks. Larry Pesavento is coming up next. And don't forget, he's got a live trading class a week from tomorrow on the front page of TFNN. Check it out. Live programming all day at TFNN, folks. Stay tuned. We'll be right back.